All right, let's get into it. Today we are digging into the wild ride of a company that's right at the heart of the whole AI revolution. We're talking about Teradyne. We're going to break down exactly what happened when its high-flying stock suddenly, and I mean suddenly, hit a wall. You know, it's a question every investor thinks about. You see a stock that seems like it can only go up, and it's just fueled by this incredible height. And then, bam, seemingly out of nowhere, it takes a dive. So what actually triggers that? Let's find out. For Teradyne, it all happened in a single day, a drop of 6.6%. Now, that might not sound like a total crash, but after hitting record highs, that's a pretty significant hit. It left a lot of people wondering, uh-oh, is the party over? Okay, so to really understand the fall, you've got to understand the climb that came right before it. And honestly, calling it a rally is kind of an understatement. This thing was a rocket launch. Just think about this. In the early part of 2026 alone, the stock surged an unbelievable 66%. This was all driven by this massive optimism around AI and the super critical role Teradyne plays in testing the chips that power the whole thing. And if you thought that was wild, just zoom out and look at the whole previous year. The picture gets even more staggering, a return of over 187%. I mean, investors were clearly betting big, and I mean big, on the company's future. And this chart really tells the story, doesn't it? You can literally see that momentum building up from late 2025, and then it just accelerates into this near vertical climb. You know, when you see a chart that looks like this, it kind of sets the stage perfectly for what often comes next, a correction. So what on earth caused this big reversal? If the AI story was so strong, why did all these investors suddenly get cold feet? Let's really unpack the mechanics of what happened here. Turns out, it wasn't just one thing. Nope, it was a combination of 4 key factors that basically created the perfect storm for a pullback. We're going to walk through each one, starting with maybe the most straightforward reason of all. Exactly. I mean, it just makes sense, right? When a stock goes up 187%, investors who got in early are sitting on some massive gains. So profit taking is really just them selling some shares to, well, lock in that profit. It's a totally natural and healthy part of any market cycle. And that leads us straight to our second point, valuation. The stock price had gotten so high, it was what Wall Street calls priced for perfection. What that means is investors were basically expecting flawless execution from the company, and any tiny hint of a problem could trigger a big sell-off. And this table just brilliantly illustrates that point. Just look at these numbers. A price-to-earnings ratio of around 88 and a price-to-sales of 15. I mean, these numbers were way, way higher than a lot of its peers, which suggested to some people that the stock price had maybe run a little too far ahead of the company's actual earnings. So the last pieces of the puzzle were really these external pressures. You had some Wall Street analysts downgrading the stock, pretty much saying, hey, it's had a good run, but maybe it's time for a breather. At the same time, the entire chip sector was cooling off a bit, with investors rotating their money into other areas. Okay, but here is where the story gets really, really interesting. Because while all this was happening, while the stock was falling, the company itself was absolutely thriving. And this is such a critical distinction to make. The story of the stock is not always the same as the story of the business. So you've got these 2 parallel stories running. On one side, you have the stock story, right? That's driven by market sentiment, volatility, and sometimes just plain old fear. But on the other side, you've got the company story, which is all about the fundamentals, strong earnings, essential technology, and actual, real growth. And Teradyne's fundamentals were rock solid. Just look at their recent quarterly report. Revenue over $1 billion, earnings per share of $1.80, and both of those numbers beat what analysts were expecting. The business was just firing on all cylinders. And this brings us to the bigger picture of the business. Teradyne is not just a one-trick pony. As you can see, yeah, semiconductor testing is their biggest piece of the pie, but the company also has strong divisions in system testing and a super fast-growing robotics business. That kind of diversification, that's a key sign of a healthy company. So this all leads to the big debate about what's next. You've got this strong company, but a volatile stock. So where does Teradyne go from here? Well, this sets up the classic Wall Street battle, the bulls versus the bears. So the bulls, they're arguing that the long-term demand for AI is just unstoppable, and Teradyne's technology is essential. For them, any dip is a buying opportunity. But the bears, they're saying, hold on. Even after the drop, that valuation is still pretty high, and they'll remind you that the semiconductor industry is famously cyclical. Now, to add a little perspective here, this kind of crazy volatility, it isn't exactly new for Teradyne. This timeline shows that the stock has seen massive drops before. We're talking over 80% during both the dot-com crash and the financial crisis, only to recover and go on to new highs. History shows it's a resilient, but definitely volatile stock. So what's the crucial takeaway here? What happened to Teradyne is best described as a market correction. It wasn't some kind of fundamental collapse of the business. It was just the market hitting the brakes after a period of extreme enthusiasm, kind of letting the company's fundamentals catch up with its soaring stock price. And that leaves us with one final, fascinating question to chew on. Was Teradyne's pullback just a healthy, totally necessary cooldown for one stock that got a little ahead of itself? Or was it maybe an early warning sign that the incredible hype driving this entire AI market might be about to face its own reality check?